Chinese stocks surged, achieving their largest single-day gains in 16 years, driven by a record turnover in domestic A shares. The CSI 300 Blue Chip Index jumped 8.5%, reflecting a nearly 30% rise from its February low, while the broader Shanghai Composite Index rose 8.1%, with turnover hitting $166.84 billion. This rally followed aggressive stimulus measures from Beijing, which included significant rate cuts and support for the struggling property market. The gains were particularly notable in property and consumer staple stocks, marking the best monthly performances for the CSI 300 and Shanghai Composite since 2014 and 2015, respectively. However, these mainland markets are set to close for National Day holidays from October 1st to 7th, temporarily pausing trading activity.
体现了协调性，对金融政策、货币政策、财政政策、监管政策都做出了非常积极的表述。
In contrast, European shares opened lower on the same day, reflecting a sense of caution among investors ahead of a week packed with crucial economic data and anticipated comments from ECB President Christine Lagarde. The Pan-European Stocks 600 index declined by 0.4%, weighed down by a 1.3% drop in real estate stocks. Despite this decline, gains in the oil sector provided some support, driven by rising prices due to escalating tensions in the Middle East.
DAX ist heute etwas leichter in die Woche gestartet, minus 60 Punkte aktuell. Die Vorgaben aus Asien waren sehr unterschiedlich. Einen deutlichen Plus in China, wo der CSI mit dem stärksten Sprung seit 16 Jahren in den Markt gestartet ist, standen starke Verluste in Japan, fast 5% gegenüber. Und das waren die Vorgaben und der DAX legt eine kleine Verschnaufpause diese Woche ein, zumindest heute Morgen. Die weiteren Themen werden natürlich sein, am Donnerstag die Industrieproduktion in den USA und natürlich am Freitag der Arbeitsmarktbericht, auf den hier mit Spannung gewartet wird.
Investors are particularly focused on upcoming inflation figures from Germany and Italy, especially following recent disappointing data that indicated a slowdown in Eurozone economic activity. Notably, Volkswagen shares fell 2.8% after the company cut its 2024 outlook. Stellantis plummeted 14%, following a significant guidance reduction attributed to worsening global industry conditions, contributing to an overall 3.5% drop in the automobile sector. Meanwhile, in Japan, the Nikkei stock index faced a sharp decline, dropping over 4%, which translated to a loss of 1,512.85 points, 3.80% to 38,316.71. This decline was largely influenced by selling pressure on exporters following a stronger yen, a result of Shigeru Ishiba's victory in the ruling Liberal Democratic Party's leadership race. Ishiba's stance on normalizing monetary policy and increasing financial income tax contrasted sharply with the recent market optimism surrounding his runoff opponent, Sanae Takaichi, who was seen as a proponent of monetary easing. In the broader market, the Topix index fell 73.85 points, 2.69%, to 2,667.09, with declines led by sectors such as real estate, transportation, and precision instruments. As these global markets react to varying economic signals, the juxtaposition of China's robust performance against the caution in Europe and the steep decline in Japan highlights the complexities of current economic conditions. Investors remain vigilant, monitoring the unfolding situations in both Asian and European markets while awaiting key inflation data that could influence central bank policies and market dynamics moving forward.